This is calculating AMT. So here we go. Jeffrey looks like he's 47 years old. Calculate his regular tax liability for 2022 as follows. So he made salary of $95,000, rental income $6,000, has some rental expenses, ends up to be like $9,000 rental expenses. So $6,000 rental income minus $9,000 rental expense gives a net loss on rental activity of $3,000. So far, so good. Short-term capital gain on the sale of stock, that's $5,000 capital gain. So 95,000 minus 3,000 plus 5,000 capital gain. Total adjusted gross income is $97,000. Okay. Now, itemized deduction, we have charitable contributions of $20,000, mortgage interest $14,000, real estate taxes $4,400, total Schedule A itemized deduction $39,400 minus $97,000 gross income. AGI gives us $57,600 taxable income. And if you use the table for tax calculation, you can end up by having something like $8,295 regular income tax. So far, so good, everyone, right? Up to here is just regular tax preparation. Any questions? Don't be shy. Okay. Now let's get into this AMT. Jeffrey used accelerated makers to compute depreciation. Had he depreciated the property using the AMT depreciation rule, he would have deducted $2,200 for the real estate property and $450 for the personal property. So you see here we have depreciation, real property. Using accelerated method, looks like it was a little bit higher. But if you use a straight line, it would be deducted $2,200 for the real estate property and $450 for the personal. So those two things keep in mind. Jeffrey received $41,500 in tax exempt interest from specified private activity bond he purchased in 2024. It's tax exempt because it's like a municipality bond or something like that. It's a tax exempt, which if you look at here, you don't see it. Make sense? So anything tax exempt is not in the regular tax calculation.
But what,
yes.
just to go back for a second, you're adding, number one says excess depreciation. So if you're doing straight line, what is excess on straight line?
Accelerated, you mean?
No, I thought you could, do you have to switch? He used accelerated, but you had to switch it to straight line for the purpose of this calculation?
Yes.
Okay. You're only allowed to add.
Because AMT says, I don't, IRS says under AMT, I don't like you to use accelerated depreciation because all of a sudden your income goes down very fast.
So what I'm asking then is, in the picture, it says add, number one, excess depreciation. It doesn't say add depreciation, it says excess depreciation.
Yeah,
So
excess depreciation means because he is using accelerated depreciation, then that depreciation is.
Oh, this is the excess over straight line.
Thank you.
I see.
Yes.
Thank you.
Okay, but I was somewhere here yet. Jeffrey received $41,500 in tax exempt interest. Keep that in mind. He also paid $30,000 for $50,000 of stock through an incentive stock option plan to set up by his employer. So he paid cheap to get more expensive stock. So that's kind of another income, right? Using this information, Jeffrey's AMT is computed as follows. Regular taxable income is 57,600. You see that right there? Okay, take that and put it right there. You add the depreciation first, excess depreciation. So real property, the rental real estate property has $200 extra depreciation because of accelerated method. Personal property has extra $150, so that's also excess.
And
so
what are all the disallowed exemptions that you're adding?
Let me get there. I don't know yet. So 200 plus 150 is 350. Up to here, are we good? Okay. Number two, or so-called second step, disallowed itemized deduction. What is disallowed? It's on page 12.8. Let me go back for a second so you can see here. All taxes, Schedule A, must be added back in computing AMTI. Any state income tax refunds included in regular taxable income are not included in AMTI, and therefore must be subtracted from taxable income in computing AMTI. What is that state income tax refund? Remember I said, if you get state income tax refund from your tax return in April or May, let's say $300, you have to record that as income next year, because if you itemize it and all of a sudden you get it back, IRS says, wait a moment, you just itemized it, you show me all this state income tax that you paid, and now you got $300 back and you want to hide it over there? No, this year you have to show it as income. So
but that's only if you itemize, right?
Only if you itemize, yes. So any state income tax refund included in regular taxable income, which normally you have to add it if you itemized last year, are not included in AMTI calculation, and therefore must be subtracted from taxable income in computing AMTI. In taxable years beginning after 2017, this deduction is limited to $10,000, which is taxes that you pay. AMTI calculation disallows the standard deduction for taxpayers who do not itemize. For taxpayers who itemize, computing AMTI requires an adjustment to regular taxable income for certain type of itemized deductions.
I'm sorry, I'm just so confused. So state tax income refunds.
Yes.
That you include that in your income for regular tax, but you're deducting it on AMTI.
Yeah, IRS says, yeah, I know for regular tax, you add it back if you itemized last year, but for AMTI, just take it out. Okay, so let's go back to that 1210 anyway. Let's look at the problem that we were looking at. So we got the taxable income, we added excess depreciation to it, we disallowed itemized deduction, real estate tax is 4,400. That has to be so-called added back to this calculation of taxability of income. Private activity bond, remember we had bond that it was not taxable for federal tax calculation, but for AMTI says, show me that you have 41,000 whatever non-taxable interest that you receive. And also, let's say in step 4, it says, oh, you received stock option for $20,000 cheaper from your employer, that $20,000, that looks like an income. So technically, AMTI is trying to put everything that might be an income into this calculation. So 57 plus excess depreciation, plus real estate taxes, plus stock options if you got cheaper from your employer. So you get to AMTI of 123,850. IRS says, you know what? This is your income. 123,850 is your income. Okay, but IRS says I'm like nice person, so I'm gonna give you exemption.
Where do we find the exemption?
Exemption is somewhere in page
120303.
12-8, 12-8, 8. Go right there. Right there.
Wow.
If you are married filing jointly, exemption is 118,000. Single is 75,000. Married filing separately is 59,000.
And the phase outs, you have to make more than those numbers on the right. Like you have to, if you're married filing joint, you have to make more than $1,079,000 to use that, right?
Yes, if you, it says, let's say you're married filing jointly and you make more than 1,079,800. Whatever you make more than that,
You only pay 25%.
25% will be your phase out.
But do you still use the exemption and then the phase out?
The exemption is phasing out.
Oh, okay.
Oh, is that right?
Exemption is phasing out because it says, looks like you are, let's say this married filing jointly.
Oh,
IRS says, are you making more than $1,079,000? You don't need exemption, technically. So for every dollar that you go above this, I'm gonna take 25% out of your exemption. Make sense?
but don't you first exempt then the 75.9 and then whatever's over 75.9, you deduct at 25%?
No.
Can you show us exactly a problem how to do that? Because this is one that I had an issue on, I
Yeah.
think.
Yeah, here. Very easy. Again, 12-9. Okay. So in example 9, it says Jess files a separate tax return from his wife during Jess and AMTI is 639,900. So it's too much, right? How much is for married filing separately? Anything above 539,900.
Yeah, so first you deduct the 539.9 and
So-
then what's over, right?
No. AMTI is 639,900. That's the taxable income.
But then
right?
you're deducting 539, the standard deduction.
Yes.
And then you have 100 left over and you take a further deduction.
100 times 25% is $25,000. Agree on that? Yes?
Okay.
Yeah, but you deduct both, right? Am I wrong?
No,
What you are?
just follow me. 100, your excess is how much?
100,000.
100,000 above the threshold. 100,000 times 25% is $25,000. So far, so good. Your original exemption as a married filing separately, let's say, is, for example, 57,300, which honestly, right now, it's more than that. This is old. This 57,300 is old. Right now, it's 59,050. Okay, but let's say whatever it is. Okay, let's say this is 59,050. This is old. For 2022, this is 5950. Anyway, that original exemption minus phase out of 25,000, your exemption is a new dollar amount, let's say $34,000. That's your exemption. Got it? If you like another example here.
Okay, wait a second.
Yeah,
Where
I'm
are they getting the 57300 from? Because Mary
Okay,
filed
okay,
signal. is
listen to me
59050.
carefully. I said this 57300 is wrong because for year 2022, it is 5950. Got it? Every year is changing.
Where is that at?
When they do that
Where
wrong,
is
like I got it
5950?
wrong on my test.
Where is 5950, right? Stay with me.
Yeah.
Don't think about anything else because when I show you 5950, which I did 5 minutes ago, you're gonna forget.
Yeah, I wrote it down.
You
I
want to
crossed
know
it out.
5950. Where is 5950? Watch.
Yeah,
Go to 12-8.
when you say 12-8, what does that mean? Example 8?
Chapter 12, page 8.
Okay.
Chapter 12, page 8.
Okay.
So here is 5950.
Uh-huh.
Got it?
Got
But this table belongs to 2022, right?
Right.
So when I go to the next page, look at how much is the for merit filing jointly. Write it down. How much is it? 118,100. Got it? Okay. So keep this in mind. Go to next page. That 57,300, that was probably, I don't know, a year ago or something like that. It has to change to 5950. But whoever was editing this book, he forgot. That's fine. I don't care. I'm just trying to learn the
Yeah, it's
system.
just when I was trying to do it for a test and I was using this as an example, I couldn't figure it out because of that. I was like, how are they getting 57.3? That is not even a number.
Okay.
That's an exemption amount and it,
Go, okay, no problem.
So,
Go to the second problem.
well, wait. I have
Yeah.
a question about this one. Okay, so their filings, Mary filings, so that should be the 5950, right? But the AMT threshold, then where are they getting that number from?
How much is it? How much is showing over there? What?
That says 539,900,
Write it down.
right?
So I'm gonna show you, then you're gonna forget. 539,900. Write it down. Go back to page 8, chapter 12. Go all the way down. Right there.
so if you're married filing separately and you make more than that, you have to take that phase out.
Yeah, if you make more than that, then you start getting phase out situation. Okay?
So you start with the exemption.
Yes.
Okay.
So
that's what
go
I'm
back to
saying.
page 9. So here is, let's look at this example because this example 10 is perfectly fine. So here says Rocky and Randy filing jointly 2022 AMTI is on 1,393,000, which is a lot of money. Okay, so initial AMT exemption is 118,100, which is perfectly correct for year 2022. So this is perfectly correct. So if you made a confusing situation at the example 9, you could have go to example 10 and every single thing will be clear.
Yeah, well, it's not totally clear because the exemption that I needed was for married filing separately.
Okay,
And
so
so I just thought something, I was like, I don't understand why they have this different number, you know?
let me tell you something. Here till next 100 years, the thresholds are constantly changing.
Yeah.
I would never ever be able to memorize it because if you ask me 30 seconds later, I don't know. Make sense?
Well,
So
I also didn't understand that you're subtracting the phase out from the initial exemption
yeah,
for the
so
amount over.
So,
I don't understand
if
that.
they make less, then the AMT exemption is will be the 59, whatever the correct number is.
59,050
Right, okay,
bucks.
okay.
So 59,050 bucks minus 25,000
Okay,
will be a number close to this number, like 36,000 something.
okay.
Okay, but let's look at the second example. It's perfectly fine. So this example says your original exemption as a merit filing jointly for year 2022 is 118,100. However, you make a lot of money, $1.393,000. Your threshold is 1,079,800 in year 2022, which is perfectly correct here. So you are $313,200 above that threshold. Times 25%, it gives you 78,300 bucks.
So reduces their.
You reduce your exemption. And now for you, the exemption is only 39,800. Why? Because you are making a lot of money.
But then can we go to the next problem because
Yes. Let's see. Any question up to here, please? Okay. So we go to next problem that we left over there, page 10 of chapter 12. And we know that this guy is making $57,600 taxable income. And we start over there to calculate the AMTI with the regular taxable income. We add excess depreciation. We add real estate tax to the calculation. We add non-taxable interest, whatever it might be. We add the cheap stock option that he receives from the employer for $20,000 cheaper than market. That's another type of income. So AMTI goes 123,850. Very good. The exemption is originally 75,900 for single person for year 2022. But this guy is not making that much AMTI. How much is this? 123,000. How much is the phase out? 539,000. 539,000. So it's way less than phase out. So there is no phase out calculation. But you know how to do it because we just did 2 examples. Okay, so no phase out. So this 75,900 goes right below as exemption. So 123,000 minus 75,000, it is 47,950 AMTI base. And since this is your base, you're gonna get a rate of 26% up to $206,100 of income.
and where do you find that rate at? The AMT rate.
I
Yeah, and
will
then
tell you right now.
Last somewhere.
12.9, 12.9. Previous page.
Not, so that's for all of them?
So here, AMT rates are up to first 206,100 is 26%. If you are married filing separately, it's just 103,000.
They don't, oh, no.
Half of it. Half of it.
28% for anything over that.
A 28% rate applies to anything in excess of 206. So far, so good? Everyone? Questions? Go back to page 10. So here we go. 47,950 times 26%, that's $12,467 alternative minimum tax. However, this guy is already paying $8,295 for regular income. IRS says, can you please pay another $4,172 as alternative minimum tax, please? So this guy ends up to pay at least 12,467. That alternative minimum tax goes in schedule Form 10, I believe. Form 1040. Yeah, somewhere in Form 1040, AMTI. Here, line 1, Schedule 2, line 1.
Problem for what?
Schedule 2, line 1,
That might be the one
and
that
it will
brings up
transfer to line 17.
the-